I just think 2026 is going to be a good year. Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be my predictions for 2026. First off, before I predict what's going to happen in 2026, let's talk about where we've been in 2025. So we saw more sales across the country. We saw more sales specific in the Phoenix area, not by a ton, but still a slight improvement over last year. The big thing is we saw a big improvement in mortgage rates. So one, the gap between the 10-year Treasury and where mortgage rates are at has continued to narrow and getting closer to normal. So the Fed really wants that gap to get back to what is more traditional, because that's going to bring mortgage rates down into the fives just by itself. So hopefully that trend continues where we see that gap get better. The other good news is that the 10-year did not have really violent swings towards the end of the year. We saw a lot of violent swings in the beginning of the year, surrounded by tariffs and all of the stuff that happened, which seems like a lifetime ago, but was just this last spring. And so that volatility really put buyers on their heels in 2025, or at least the first half. Now that the market has kind of calmed down, we have seen a lot more activity within the marketplace with home selling, buyers entering and feeling comfortable to purchase because those mortgage rates have stayed relatively calm over the latter part of 2025. So while the volume of homes sold across the country and in Phoenix is getting better, it is still far below normal. So what does that tell us? Well, it tells us that there's a lot of pent-up housing sales and purchases that need to be done. So it's not just first-time home buyers, it's also people who want to sell their current home to buy the next one. So there's a lot of people kind of who have been sitting on the sidelines, and at some point in time, that dam is going to start to release. I don't necessarily think it's going to break and we're going to see like a deluge of people entering the market, but you are going to start to see some of that loosen up. And I think we're starting to see the signs of that happen actually right now. So the other good news that came out of 2025 is the Federal Reserve actually started cutting rates. Now, don't get me wrong, we are still in a very restrictive policy environment right now, but because of the state of the economy, the state of the job market, inflation has remained relatively calm. They have started easing monetary policy this year through a rate cutting cycle, which has also been favorable for lending costs. Which leads me into 2026. I think that trend is going to continue. So we all know that Jerome Powell's tenure as Fed chair is up in May. We already know that Trump is going to replace him. He's made that very clear, and he already has choices lined up and is in the interview process on who that's going to be. So whether you like him or you hate him, it doesn't matter. Who Trump puts into his cabinet tend to be people that agree with him and do what he says. So we can, infer that come May, the person that is going to reside as Fed chair is going to be somebody that toes the line, bends the knee, kisses the ring, whatever you want to say, and listens to Trump and is going to put us into a more favorable rate environment and probably cut rates a little bit more quickly. The trick to that is they have to convince all the other Fed governors to get on board. So what you could potentially see is the Trump administration targeting individual Fed governors to try to get rid of them if they stand in the way. So it's going to be really interesting to see how the replacement of the Fed chair in May coincides and if that person is going to be able to get the individual governors to be in favor of cutting rates more aggressively. So, it's not a done deal just because he's going to replace the Fed chair that we're automatically going to see rates drop. Because that person, it doesn't make executive decisions. They do have to get the other Fed governors on board. So it'll be very interesting to see how that plays out in the second half of 2026. While we don't know exactly what the future is going to hold, what we can tell you is that markets favor predictability. So when a market is very unpredictable, that's when you see these violent swings. And regardless of what side of the aisle you fall on, nobody wants to see that because that creates uncertainty and then everybody just freezes. So we want to see the market have predictability in it. So as long as that happens and we don't see any, black swan type events, we should remain in the environment that we're in now. And I do think that we will see that 10-year come down, get below 4%, maybe into the high threes, which is also going to result in hopefully slightly lower mortgage rates. Now, as it pertains to mortgage rates, as we get into 2026, I don't think we're going to see a huge drop. I think we'll be lucky to get down to 5.75. So I don't think that we're going to see anything lower than that unless we see the job market break. Now, if we see unemployment spike, then we can absolutely see mortgage rates get lower, because when unemployment spikes, the Fed, the government gets very aggressive in their fiscal and monetary policy to stimulate the economy, and that typically results in lower mortgage rates. So my predictions, again, for Phoenix is that we're going to see more sellers and more buyers. I think we're going to continue to see the market improve. People can only delay their life so long based on mortgage rates. And so people's families are growing, people are passing away, people are getting divorced, kids are leaving for school. Life continues regardless of what mortgage rates do. And so I think that you're going to continue to see inventory loosen up, more transactions take place. And I think that 2026 is going to be the year that we kind of look back and say, okay, the real estate market really took a shift in 2026 and getting back to normal in terms of the overall activity. So I think we're going to see more buyers enter the market. When more buyers enter the market, those buyers have homes to sell, because again, it's not always just first-time home buyers entering the market. So you're going to see more inventory too, because those buyers are also sellers. So you're going to start to see more people selling their current home to buy their next home, and that is going to return in 2026. So the things that we want to pay super close attention to are really simple, and just two of them. It comes down to the unemployment rate, and it comes down to the rate of inflation. So as long as inflation doesn't start to go up, we're going to continue to be in an environment where the Fed is going to be reducing rates. If we see unemployment go up, those rate cuts could get more aggressive. And in terms of like recessions and those types of things, usually it's not caused by what you expect. So I don't think that we're going to see a recession caused by AI. I don't think we're necessarily in an AI bubble either, because how can you be in a bubble when everybody's talking about it and everybody's aware of it? Just doesn't exist. That bubble then just slowly starts to deflate, which I think that we saw in 2025 already. So, the things to pay attention to, black swan events that we just don't see coming could derail everything. That's why it's called a black swan event. And usually what throws you into a recession is the thing that you weren't paying attention to. So, but really as it pertains to housing, the two main things to continue to watch is the unemployment rate and inflation. It's as simple as that. So as long as inflation stays where it's at, hopefully continues to come down, and if that unemployment rate goes up or down, then you can fairly easily predict what the Fed is going to do with borrowing rates. The question I always get asked is it a good time to buy a home? And I think that if you're asking that question, it's probably no. You need to buy a home when it's the right time for you, when it's the right time for your family. If you are going to be selling a home within 2 years, it's probably not a good time to buy. I have a lot of clients that over the last 2 years are actually, truth be told, probably upside down slightly with what they paid for the home versus what it's worth today, plus once you factor in the cost of selling. So if you're somebody that's going to be in the home for a short period of time, then I would say continue to rent. If your timeline is going to be 5+ years, then absolutely, as long as you feel comfortable with the monthly payment and where you're going to be. So that is really a personal question, and you have to feel ready yourself. But real estate is always a good opportunity regardless of the market that you're in, and as long as you're going to be in the home with any sort of duration, right? Most people are in their home on average 7 to 10 years. I think that number is a little bit higher now, more like 10 to 13. And so if you're in your home for that long of time, what's happening today ultimately doesn't matter that much. So as long as you're good with the monthly payment, the affordability, and you're going to be there, I would say for at least 5 years, then absolutely it is a good opportunity to buy a home. As it pertains to home values, I think that you will start to see a correction in the market. I think that home values will start to get back to normal in terms of their increase year over year. COVID was not normal, so we are not going to see that again where home values are up 20 to 40% in a year or two. That is abnormal and we absolutely don't want that. That's what's put us into this affordability crisis to begin with. We want to see home values appreciate 4 to 5% year over year, and I think that that's what we're going to get back into. If you are in a position where you purchased townhomes and condos, those pretty much lost value. Those continue to be really tough to sell in this market. Single family homes over the last couple of years are probably mostly flat depending on the area, slightly up depending on what improvements you've done to the home. But yeah, it's tough if you are somebody that's in a position where you have to sell it and you only purchased it within the last couple of years. You're probably, financially, again, once you factor in the cost of selling, a little upside down on that. I am super bullish on the housing market for 2026. I think that we're going to start getting back to more normal transactions, people selling, people buying, and just more normal. And it all has to do with, I think, mortgage rates just staying relatively steady, coming down slowly, and a lot less volatility in the interest rate environment. And so I'm very pro 2026, and I think that we will be looking back on this year, and 2025 was slightly better than 2024, and I think 26 is going to be better than 2025. If you stuck with me this long, thank you. If you're new to the channel, I put out monthly market updates as it pertains to real estate. I'm also an expert in estate and probate sales, as well as the senior living space, so I do put out video and content surrounding that as well. If you have any questions, leave them in the comments below. Please give a like and subscribe, and I will see you next month.